Good morning. Welcome back. Welcome back to the 32nd episode of State of the Market Live. Today is July 19th, and it is a fresh Tuesday morning. And let's see what the markets are saying. Yesterday was a very strange day. We saw Nifty and Bank Nifty forming different types of structures. So let us observe what is happening on a daily time frame, and then we'll get on to the intraday time frame. Before that, let's just look at S&P 500 futures, how they are behaving, because they are the go-to markets for all global financial assets, whether it is oil, dollar, currencies, Asian equities, whatever. So you need to look at what the US market is doing, because the price of an S&P 500 futures contract mostly captures the information that global markets are doing. The reason why I look at S&P 500 futures is the price, the particular price of S&P futures. For example, you take this 3843, this encapsulates all the information that is available globally. You don't have to track 100 markets. That means you don't have to track oil, you don't have to track the USD dollar index, you don't have to track bonds, Fed's rate hike cycles. Yeah, they're all good to know if you are working in those markets. However, if you want to observe the global markets in one sense, the best thing to analyze is S&P 500 futures contract. They are called E-mini futures. Let me change the color here because it is bright. So I just observe E-mini futures all the time. Most of the retail traders, they observe Dow Jones and other indices, like, or maybe in US, most retailers observe Russell 3000 index. But I prefer S&P 500 futures because the price of a S&P 500 futures contract encapsulates literally every market in the world. It is a 24/5 market. That means even when the US is sleeping, the Asian market is trading S&P 500 futures. So when you're tracking S&P 500 futures, you have the pulse of entire global markets. Okay, so most of the time I do not track any other asset classes, though I have knowledge about those. I know how rate markets work, and I know how currency markets work, but we don't have to track unless we are trading them. We should not spend our precious time on everything, literally everything. That will be only distraction, and it will bring you analysis paralysis if you are literally tracking every asset class. So that is a little nice intro about S&P 500 futures. I just love the contract because it is the most liquid equities futures contract in the world. Of course, there are liquid currency contracts and bonds, but S&P 500 futures are the most liquid futures contracts in equities. So I track it. Now, when we track it, we need to have precision. We need to gain some information about what we are tracking. Yesterday, I told you that 3823, not just yesterday, for the past few months, I have been telling you 3823 is your anchor level where you can kind of understand what the market is doing. You see that yesterday we went from there, we went all the way up to 3890 or 3900, and I told you yesterday you can go back to my yesterday's video and check that we need to break 3910 and 3920 levels. We did not break. So obviously we started making lower lows and lower highs, and that's it. The market cracked at the fag end of the day in the US session. Now, if you in market profile terms, this is a kind of a double distribution day. Excuse me, sorry for the trading view servers. It keep on hopping like this. Well, so in market profile, this is called a double distribution day. We have a nice distribution, and then we have a big fall. Now what we are doing is we are just trading in that spike zone. So the nice spike late at the end of the day to close near the lows. So S&P 500 was lower yesterday because of that. It has broken Asian lows as well. So today we are very tepid. After a trend day, we are tepid, and that is how the auction markets work. So if you want to understand how the auction markets work, I have a webinar that that was a recorded webinar that we did yesterday. On Sunday. So if you want, the details are available on my Telegram channel in the link or in the link of this video below. So let's analyze S&P 500's futures shortly, and then we'll hop on to SGX and then Nifty and Bank Nifty futures. So at 3823 we are taking support. So today the markets seem to be kind of slightly positive from here. That means they are range bound so far. However, it will be positive. It will not be easy for it to break 3823. If it breaks, it is going to be a little small crisis, and we have a spike zone here around 3790. So below that we don't have to see, and if there is any change, I'll inform in the Telegram channel. That's it for S&P 500 futures. Let's see what SGX futures are doing. So SGX in Asia is trading around 169 levels. So this is the key information that we have to glean from. So yesterday I told you that 154, you can go back to the channel and see 154 is a key level that was to be broken. And yesterday we nicely gapped up above that level as in regular trading hours, that is in our regular market hours. We gapped up nicely until 16,500, and then we kind of did a balance zone that we'll look at in while analyzing Nifty futures. So as SGX, sorry about it. SGX is trading around 150, 170 levels. So we will see in a bit why 182 is a key important level. We will see that in a bit in our market profile charts. We need to stay that if the market wants to do a negative turn, take a negative turn, if at all it has to go above 16,185 is very important. Let's see how it is going to be. We'll observe Nifty futures in a bit. So that is what SGX Nifty is doing. So it is a bit negative. It is trading 1% down in Asia markets. So the market is tepid now. Let's see how the open will be. That means the pre-open can be always different. Players can change their tune during pre-open. That is why I do not get biased with this kind of information. So we have a nice here. So we have to stay within this balance. If we break this balance on either side, we'll get a trending move. Now, let's see what is happening or what has happened in S&P. Sorry about it. There is some issue with the trading view. Yes. Now, yesterday, our Nifty futures is we closed near 16,300. However, spot closed a bit higher. Futures closed at around 300 exactly. So yesterday we opened roughly kind of around lower levels. However, the market immediately, kind of within a second, there was a kind of, people call it a freak trade. I don't call it a freak trade. It is something that large players always do. They want to control the market. So to control the market, they are kind of going to take the entire inventory available at this level. If you see that they have taken off entire inventory, and then the market, kind of the market opened here, it went up, came down with, we'll see that in market profile chart, and then slowly we kind of went up towards here. So this is like, kind of from 200 to 300, around 100 points, but this entire 200 points is now in their bag. They want to control the volatility, so that's why large players kind of consume all the volume. Whatever stop losses are existing here, they would have consumed. So now the market has to go above 300 to cover this zone. Either the market will cover this box or it will stay below this, and any break of this day low is going to be paramount to clear this gap and then to this level. What is that level? We will see in a bit. So let's know this. So this 16905 is again the focus level that we have to keep on the downside. Very, very important. So what is the zone one? I am expecting, we'll look at intraday charts as well, don't worry. So this is the zone one I am looking at, and this is zone two, and then this is zone three. Basically, if you have a gap zone, so below this zone three, these are the levels that we have to keep in mind when we are going towards this weekly expiry. Okay, so that's it on a daily chart. Let's look at what intraday charts are saying, how we behaved yesterday and how we are going to behave today. Let's look at a 15-minute chart. For execution, it is always better to go for 5-minute chart. However, to get an understanding of how the charts were or how the market movement was, it is always better to go for 15-minute chart. So we have a gap zone here. Now, so you see that yesterday, this is called a nice extension handle. No one would have predicted this. The market opened right here. The market opened right here. This is the open. It went up and came down in a bit. So probably if you look at the 1-minute chart, it is, and this is not something called a free trade. I don't agree with that, because generally what happens is large play, you see that. So if you kind of look at the bar replay, I don't know whether I have the bar replay option. Let's see if we can replay. Let's see if we can replay. I don't know whether this can be, let's see, every 3 seconds, and then let's start from here. Let's see how the bar would have formed. Let's see how the bar would have formed. This is yesterday's close, and that's it. That's it. That's it. Within a second, you see how market was trapped. That means these are the high frequency traders who kind of trapped us a lot right in the first minute, within a minute. Okay, you could not even feel the difference. You see how within the first minute it opened here, went up, came down, went up. That's it. It closed here. So this is the key level they have. So yesterday's open at first minute was important. So once that is broken, so we went almost towards 300 and then closed it there. And then in market profile charts, we'll see how it is going. So just for a minute or two, let's see how the market behaves. This is a 1-minute chart. So we should, kind of, then we will convert. We will increase the speed and see, these are the markets which you have to observe in a replay. That is very, very important. So this is a 30-minute chart. Let's play it again and then increase the speed. See how we have, kind of closed it there. Okay, so we just went up and closed it there. Now we did not break yesterday's low, which is 170. This is the reason why I say today's low is very important. If you go back and see, SGX is trading around this level. Let's close this replay. Yeah. So this is very important level now. So yesterday they marked this level. Apologies. So yesterday they marked this level. So if you see SGX is trading around this level, this is the zone between close of this first bar and first 30-minute bar or whatever. So between that and this 170. So this zone is very, very important. If we break this, we are going to close the gap. and then to go down towards 15,905. So this is going to be my zone 1 of action today. And zone 2 can be this. I do not see upside as of now. Sorry, this is zone 3 and this is going to be zone 2. Today I'm expecting the market to open below this level, go down and hit 905. This is my first hypothesis. However, a hypothesis is not a bias, it is a plan. It is a plan. For example, what do I mean by hypothesis is, if you want to go to office, you will have a plan. For example, if you are say in Bangalore and if you are staying in JP Nagar and if you want to travel to your office, your plan is to go through, let's say, path 1, okay, first path. However, if it fails, you have another alternative. So you will keep another alternative to avoid the risk of getting stuck in traffic. Similarly, in my hypothesis, I'm expecting the market to open here, come down, go up, come down, and then go up and close here somewhere. This is the plan. This is the plan I am laying. However, there is plan B. If the market opens and goes up, I will respond to that accordingly. And if it breaks this, I will respond accordingly. And if it aims for 16,520, I will aim for that accordingly. And this will happen one day. If not today, it will happen another day. However, the structure, the price action does not seem to support this up move as of now. However, I will not be shameful to accept that I am wrong and then get on to the upside or get on bullish above these levels. So what are the levels that we have to look for in within this? We will look at market profile charts. So depending on the open, depending on the pre-open or depending on the open, we have to decide our trades. You just should not blindly go with trades with your bias. That's very, very important in trading. Now let's see what is happening in Bank Nifty. So eventually we have covered the zones in Nifty. Let's see what is happening in Bank Nifty. Before that, I wanted to show you something. Let's look at daily chart. You see, this is an inverse kind of, what is this technical pattern? This is an inverse kind of hammer. And you see that what has happened in Bank Nifty. That means we are in a fix. So you see that we have an inverse green hammer in Nifty, and in Bank Nifty we have a normal red hammer within Bank Nifty. So both are different. Both have a different price action, and there is no gap. You see that in Bank Nifty there was no gap, and the kind of the open was at high. Yesterday, Nifty's low was Nifty's open was at the low and Nifty's open was at the high. So this indicates to me a kind of move for this expiry. However, I will not be even doubting if the market does otherwise, and if the market goes above 35,842, I'm not going to sit back and with my bias. I will respond accordingly. Now, what is Bank Nifty doing on a daily time frame? We are kind of trading within this balance zone. So if we are staying with this within zone, I'm going to be very happy writing options and kind of making money for this expiry. So until last expiry, we were within this zone, and this expiry as well, we are within this zone. So if we expire within this zone, it is all but good between 3,600 and 3,000. Let's see what is the level. Just a minute. Let's find out what are the two levels. So these are the two levels. Actually, it is here 34,500, 35,900, or let's say 36,000. So these two are the levels where I will see a lot of balanced moves. So whatever is the large, whatever is the size of the move. So within this move, within this, let's say, kind of 1,500 points move, I'll be very happy to trade in the range. Let's see what is what are intraday charts saying. I'll just remove this, delete here, and then let's go to 15-minute chart. see what the market has done yesterday. Boom, that's it. You see that we have, the first minute bar of Bank Nifty and Nifty are different. Let's do a small replay. I will do it with 1 second. Let's see. Let's test 1 second charts. If we have the luxury, we should do it. So we should just go just a minute, guys. So okay, so let's see how to take it. Let's do it 1 minute and then turn. Let's see. We'll keep the bar here. So we'll ask for replay and then, oh, this is the bar. So we'll do replay. We'll do it slowly and then replay. So let's see how the market moves. So let's see how the open happens. So this is when I say 1 minute, this is the last 10 minutes of day before yesterday, and we want to see how yesterday's open has happened. Let's see that. So this is a nice replay. This is a nice feature trading view has. So I'll keep using it whenever we have to show some price. That's it. I'm sorry, guys. See how, oh my God, that is how the first 1 minute bar was missed. So probably I'll stop here. I'll put a line here, and then I don't know how to kind of go back and do it again. Replay. No. So let's say yes, and then we'll again kind of again see. So we'll just say replay. We'll put a line somewhere here, and then now let's see how first 1 minute bar. So now you see that until 37,700, the bar got formed within 1 minute. So it will show you how important that move is for understanding the market dynamics. Let's just wait. That's it. See, you see that. So for I have a 1 minute chart. Within 1 minute, this bar formed, and you see that this is the close, and we traded the market. The players kept around fiddling with the what I say close of this first minute bar at around 35,000. So they did not break, and then suddenly they took it almost covering 3/4 of the bar. So this is how it happened, and let's increase the speed so that we'll see what is happening. See, that's how the market traded down the close of the first bar, and then we started perking up after certain time. So probably after 12 o'clock, we started, when the US markets were growing. So suddenly we started perking up. That's it. That's it. So you see, after 12 o'clock, when the UN markets opened, we started creeping up higher, almost by kind of 3/4 of the bar, 3/4 of the bar. So that's it. We can stop the replay, so we don't have to worry about it anymore. So let's go back to 15-minute chart and see that we have covered 3/4 of the bar. When I say 3/4 of the bar, how do I say it? Very simple. You do have Fibonacci of this bar, and you see we went almost to kind of 61%. That is almost 70%, you can say. So basically 75% it should be we made up to kind of 75, yeah, 3/4 of the bar. So this is only to get back all those guys who are remaining. So now in terms of price action, let me tell you what would have happened. So initially they covered they took all the order flow that is lying here, and then they were not happy. Okay, so they went again and took again. So now today, how it is going to be, let's look at market profile charts briefly so that you will have a decent idea of what would have happened yesterday. Now yesterday, you see here, I told you that 245, 252 or 234 is very important. That means if you calculate the average of sorry about it, not this one. If you calculate the average of let's see if this works. So it is 16 252, and then the average of 16, um, 16,234. You see that roughly it is 244 or 245, and see how these both were my levels. So I gave you these levels, I gave you these two levels, and see exactly at the average they have made the point of control. This is a very key concept of market profile. So I'm not I feel great that at my chosen levels they have made the point of control. That means instead of following market profile follows my thesis. That is what happened yesterday. So yesterday we nicely made a small curve. However, there are some imperfections in the curve, in the market profile curve. So this level of 310 is going to be very important. And today, if you see exactly, we are trading below this 185 level value area low. So we may fill the gap and go towards 16,095. So as I told you yesterday in my Telegram channel, that the expiry tomorrow can be around 16,100. There is a fair chance. I'm not biased. I won't sit with that bias throughout the week. So I'll manage positions once the market does something different. Now, yesterday, you see that in Bank Nifty, the profile is very thin. This is called a thin profile. That means there is a lot of imperfection here. So mostly we might trade in this zone today. Apologies. On the downside, if we break 34,905, we will end up hitting 34,680. However, if we go up, there is a nice bit of resistance around 35,500 levels. And this extension handle is very important. It is going to play a key role in the days to come. If we go above 35,500 and towards 36,000, so there will be a day when this extension handle will be covered. And kind of a large player is now sitting on with inventory above us, so he will have to let us leave above these levels. So that is very, very important. So we have taken quite a bit of time. Hope you're not bored with this kind of deeper analysis of Nifty and Bank Nifty futures. Only if you analyze like this, your precision improves in the market. Yesterday, in terms of stocks, let's go back to stocks. Yesterday we took old toss. I'll just give a view and then we are done for the day. So yesterday we took old toss at around this 21 level, and then I expected the market to go until 1060. However, we closed around 36. This is where we exited as well. We exited fully around 36 or 37 levels. And this is a very nice trade. And we took HDFC Bank as well, but that did not work. Did not go down as expected. So today there might be a slight gap down, and HDFC can hit my target of kind of 1591. However, we will see how it behaves in the pre-open. That's it for hope you have loved this edition of Market Live. Have a great day. Be safe, and please subscribe to my channel. Tell your friends to subscribe. Please like the videos so that I get visibility in YouTube. And also please give in my comment section what you want to hear from me in SOTM. Have a great day. Bye-bye.